Welcome to this week's episode of the Raising Millionaires podcast, finally in 1080p after we have learned how to use Riverside. I am your co-host, Roger Bryan, and that is...
I am your other co-host, Richard Lorenzen.
Richard, how are you today?
I'm good. How are you, Roger?
I am well. I know you're on baby watch. When's the final day before they go in and do something?
You know what? I have no idea, but we are about.
Oh my goodness, you do not want that on a podcast.
I know that. Well, we're about. Let's see. Our due date was Saturday, and now what today is Tuesday, so we're about 3 days over. Um, but yeah, it's interesting. What I've heard from a couple friends that have also just had their third was that the third tends to come slower than the first two. So right now we're kind of just letting it ride.
Okay.
But we're still waiting.
Exciting times, right?
Exciting times.
You already have a name picked out?
Not yet. I feel like you've gotta look at the baby to really know. We with the first two, like we had such a hard time deciding on names that like when you check out of the hospital, like you're required to have a name so like they can take the birth certificate and submit it. And like we waited until the very last minute, like the second day after the baby was born, before discharge. Which
I would have
usually.
an anxiety attack.
Did you have your name lined up 6 months before?
Claire was a couple months before. She really was. Carter came down to the wire because there was a part of me that was considering Roger Curtis Bryan the third,
Hmm.
but Krista kind of talked me out of that because Roger is such an old name, right? You just
Hmm.
don't meet a lot of them.
Hmm.
Um, she had a bunch of backhanded ways to make it my idea to not do it. But I think Carter, he's a Carter, right? He's a perfect Carter, so I'm not complaining.
Yeah, it suits him.
You only get that one chance to be like a junior or a third or whatever after that. So,
It's true. That's true.
all right, today's
So,
topics. Richard, I want to talk a little bit about AI. I want to talk about Base 44. I want to talk about tools. I
yeah.
love, huh?
No, I feel like that's where we've got to start because we had a big Base 44 episode last week.
Yeah, and I posted on social media about it, and it's one of my best posts of all time on TikTok.
Okay. Well,
So that there is an audience for, I don't want to call them the anti-AIers, but I'm going to call them realists, and then we can talk about that in a little bit.
well,
I
where
also,
we left off.
what's
Go
that?
ahead. Go ahead.
Is there a delay at all, or am I just not paying attention?
Maybe. I think there might be a slight delay. I don't know if maybe it's my Wi-Fi or.
Yeah, because normally we don't have that. It's like a half-second thing. But
Yep.
the other one is I want to talk today about the Trump tariff Trump tariff tantrums.
Taco.
President 47. Wait, is he President 47?
Okay.
Okay. I think
So
that'll be fun.
let's start with AI because where we left off
Okay.
last week was you seemed very bullish on Base 44 when we were closing out. You were like a kid at Christmas playing with Base 44, but it seems like in the latest video that you posted to Instagram, maybe it was today or yesterday, you seemed a little bit more disenchanted with Base 44. So
There is two parts to this that I need to clarify first. Any individual using AI has to understand slippage,
yeah,
has to understand hallucinations, and has to understand that the platforms themselves document the fact of inaccuracies in output. Why is this important? Because I am calling BS on most programs and tools that are selling you on AI replacing human beings to do sophisticated work at scale.
okay,
Why? I built this beautiful platform. Richard, from the time we got off our last call, which was on Thursday, I worked till like 3:52, didn't get up, didn't go to the bathroom, didn't really move. When I finally stood up, it's like my back and shoulders arched. Then I came back to work at 8 o'clock that night and worked till 1:30. This platform was massive. It had everything. It had an affiliate platform. It had an SEO platform built in. It had all of the prompting engines segmented and built out. It had all of the forms done. It had all of the navigation. None of it worked, right? None of it worked. Then as I went in to try to change one piece at a time to get it to work, because AI is AI, it would undo or redo parts of other tools that were supposed to be set in stone. So imagine if you have a report, it's 80% of what you want it to be, and you're like, this one change is going to get it to 85%. Publish. Why am I at 60%? Document all the things. Okay, this is going to get me to 100%. Publish. I'm at 75%. Okay, progress. Here's what you forgot. Publish. 85%. Yes, 2 more things. Publish. 40%. There was a realization as I was doing that. The majority of things that people want to do with AI still, whether it be data aggregation, documentation, formatting, development, they're not really AI. Think about it like this. All of those financial instruments and tools that we've designed, they're formulas. They're not AI. So I got stuck chasing a bug where the child profile wouldn't save all the input data and wouldn't generate a report. So that was my July 4th, 5th, 6th, and 7th. Chasing that one bug. And then finally I started to deconstruct. No, that would have been through the 6th, because Sunday night I started deconstructing. I started deleting big chunks of the platform, looking for a conflict. Then I was in settings and I finally saw the problem. There was a permission issue. The way that it had set the permission for the data wasn't allowing me as the admin to see the data that the user could see. So if the admin can't see the data, the database can't save it. A ridiculous permission issue that no developer would have ever let happen, that cost me 3 days, $50 in credits, and I just decimated the system to find it. So then I started to rebuild it, but I started having that same problem again. I'd build, it would break. I'd fix, it would break something else. Today, I started rebuilding the platform with the understanding that 90% of the platform is not AI driven. So I separated out all of the AI from the formulas, from the algorithms, which meant I had to write manually all of the formulas, all of the algorithms. Now manually is you input it all into DeepSeek, you get an output, you copy paste it, and you take it over to ChatGPT 4.0, you let it run through that, and then you take it into Base 44 AI, and you let it run that, and then it codes it. And that's working pretty well. I am still facing problems right now with cascading changes, even in non-AI elements. Please do phase 4 of the update. What I'm trying to get to now is a solid enough base that I can take the current platform, move it over to production, and then build a dev platform. And then segment out the features.
Got it.
So, ask me for feedback on Base 44.
That's where I was going to go next. My next question was, so are you currently still doing this in Base 44, or have you moved on? Because you basically, because you posted a video to Instagram, was it yesterday, saying that Base 44 is a rug pull?
Yeah, so the answer to your question is Base 44 a working platform? If you have some development background, you can use this tool to build out a framework better and faster than any other platform that I've ever used, right? If I think back to where I was on July 3rd with the robustness of the platform, even though it didn't work, I wish I would have exported that to GitHub, stopped, turned it over to a developer who could have then gone through and built out the infrastructure of it. Because it would have given them a functioning wireframe, a flowing wireframe that didn't function, and then we could have built out the internal modules inside of it. To this day, I still cannot get Base 44 to store data into a database. meaning that like the data exists in a way that can be used in other places. It is such a interesting tool that I would love to see like what applications people are actually building and deploying. Super simplistic, I think would work. You start getting into, I built out this modular prompting engine that broke the entire wealth report into all these subsegments that fed on itself in a way that I would never be able to do in OpenAI. And it was brilliant. The only problem is it didn't work.
It's super interesting. Who was the company that bought Base 44?
Wix.
Wix, right. So, knowing what you know now, what do you think Wix was paying for when they acquired Base 44? It seems like it wasn't the AI technology.
Well, if you know about the Wix website builder,
Mm-hmm.
right?
Yep.
In its first iteration, it kind of sucked too. And
Yep.
even though drag and drop website builders have come a long way, they don't necessarily create sophisticated coding. If I was to say that I wanted to use Base 44 to create a membership site where people could easily log in through a subscription connected to Stripe, and then on the inside I build a training platform,
Mm.
right? I could probably spin that up in 20 minutes now with Base 44. Where
Wow.
before I would have to create a WordPress install, I'd have to apply a bunch of plugins, get a membership site plugin, or pay for a
Yep.
third-party membership tool, right?
Right.
You don't have to pay for that anymore. For basically the cost of hosting a website, you could build that out yourself, and have the whole data structure to manage users.
Okay.
So
Hmm.
maybe I have unrealistic expectations of its capabilities at scale, but it's still allowing me to get further into development without heavy developer costs. But I do feel like quitting about every 30 minutes when the mess that it keeps creating when I'm so close to having a working product.
Super interesting. So I've got to go through and try the latest iteration for wealthplans.ai. Um, I'll check that out this afternoon.
Yeah, almost was going to tell you to do it before the call so we could talk about it, but then I did a small update to the risk assessment section, and like 70% of the report disappeared.
Okay.
And now the report page is blank, so there has to be an error in rendering. Please isolate the error without deleting half the page again. If I feel like somebody who knows how to code, right, could probably go in and do fabulous things with this. Like
Mm.
really knows how to code. Like can go into see a problem, go into the code and say, hey, on line 44, you did this and you should have done this, and fix that. That they could probably build amazing things fast with this.
Still, to be able to have a platform where somebody who doesn't know how to code can go in and even get something 50 to 60% built is still a long ways from where we were just 12 months ago.
It could be. It could be. Here's the problem with that. Can you turn that code over to a human developer and have them pick up where it left off? That's really going to be the next question with this, because
Right.
if you can, yeah, there might be something to that. I just don't know if you can. A lot of times my experience has been if you have one developer build something and you go to turn it over to another one, they want to start from scratch, right? They don't want to inherit bad code. I went on to Upwork and I put in Base 44 as a freelancer keyword exact match. Only 3 people came up. 6 months from now, will there be 3,000 people
Yep.
on Upwork that
Yep.
know how to troubleshoot it and have learned the code base and can work inside of it? That might be something. If you're a developer watching this and you want to find a segment where you can improve speed to market and then be the troubleshooter, right?
Hmm.
Base 44 might be a great solution for you.
Yeah, that's a good point.
I was thinking like in the marketing space, right? An intake form that takes in competitive analysis, business information, avatar, even uses AI to develop some of that, and then turns it into a playbook, which is how I've always done my marketing. I could
Hmm.
easily, I could probably build that in a half hour. and it would be very stable, and the output would be great because I'm not asking it to like run multiple agents, run different profiles in different forms. If I had a singular approach, or if I built this platform just for children's wealth plans, and then built a different one for personal, and a different one for legacy, and a different one for estate planning or tax planning, probably better. Somebody knows something that I don't, and or they bought it for potential, not for current capability.
Yep.
Okay.
That makes sense.
Now, Richard,
Yes.
taking that conversation, translating it into the public markets, investing, and the idea that AI could potentially be a bubble as big or bigger than the dot-com era. What are your thoughts on the potential for AI to be a massive bubble?
I think in the short term, obviously you're seeing the AI trade kind of reinvigorate again, right?
I
But
mean, Nvidia's hitting $4 trillion now.
yeah,
It's added
I
$1 trillion in market cap.
yeah, you're starting to see a lot more energy behind the AI trade again. We're also sitting in the first kind of full week of July, where earnings season is going to be kind of kicking off in the next week or two. So you're going to have the age old, everyone's going to be watching Nvidia and all of these companies for some sort of evidence that AI is translating into bottom line results. We see it every quarter. I don't know if you're still going to see that materialize, but it certainly seems like in the short term the AI trade is back on. In the long run, is it a bubble? I don't know. I think it's overvalued. I don't know if it's a bubble. I think AI has real utility. So I
Well,
can't
the
be.
internet had real utility, right? But it didn't translate into the 1999 run being the internet that we have today.
That's fair. That's fair. I don't know if I would have. I guess we call it the dot com bubble, right? From a financial standpoint, yes, but from a technology standpoint, the internet wasn't a bubble. There were iterations, right, that it went through.
Well,
Uh,
the stock market's perception of the internet in 1999 to 2000 created a bubble for overhyped capabilities.
were those capabilities really overhyped, though, as we sit here in 2025 with Base 44 building apps for us?
Well, and you know what? It's funny. I'm looking at the report that it generates. It removed the table for the stress test.
It really depends on what your horizon is as an investor. Even if you had bought the Nasdaq in 1999 or 98, right, at wherever the peak was, um, you made a lot of money if you held on. At
If
the
you
same
held
time,
on, but I think when you think about a bubble, like the Nasdaq fell 76% during the dot-com burst,
yeah.
76% over 2 years. So that's when I talk about a bubble, I mean an extended period of time in which the market substantially, like 76% decline,
Hmm.
right? That, if depending on your age, that dramatically changes your wealth footprint.
Yeah. I don't think we're going to see a 76% or something similar to that correction in AI stocks.
But
Maybe you see a 20 to 30% pullback.
that's still a big deal.
And we saw 20 to 30% pullback in April, and we're already
We're
surpassing
already
that
already
level.
roared back. It's just that I'm sitting here thinking, okay, with, and I always have a bear mentality and try to invest around that. But like,
So at the same time, I say all this, but I'm also, someone who is very diversified, right? Like I'm not concentrating by any means any kind of like a plurality of my allocation into AI or even in tech. I'm indexed across the S&P, the Nasdaq, Russell, emerging markets. So, um,
I mean, that
even if we kind of,
diversification is great, but when the Nasdaq fell 67%, I mean, the S&P still fell. What was it? What did it fall?
was this during 2000?
Yeah, it took 7.2 years for the S&P to fully recover from it dropped 50%,
Yep.
right? So it's not that, like, diversification only goes so far when you have a market bubble.
Yep.
I'm just wondering if
Again,
AI is going to be a bubble, given my perception of its capabilities relative to what the market expects. I'm seeing more and more articles come out about companies who rushed into AI and thought that they were going to have these huge cash savings, are now having to rehire a bunch of people. Now, robotics, different conversation. But this, like, human replacement thing, I don't know. I'm just not buying it anymore. I'm just not buying it.
to me, there's no doubt that companies rushed into it. They overinvested, and also that the stock prices for a lot of these, like Nvidia, are way overbought and overvalued. No doubt about any of that. Um, at the same time, if I were looking to make a speculative investment right now, again, speculative investment, this is not like 80% of my retirement fund. To me, the best speculative play out there is probably still AI. Better than crypto, better than most of the other, maybe not robotics, but um, I don't know. Again, like it comes down to investment horizon. Like again, like you said, it took 7 years for the Nasdaq to recover after the dot-com bubble. Um, so if you're a person who is, within, let's say, a decade of retirement, let's say you're 50 years old, you want to retire at 60 or 65, um, I can't see any world where you would have a significant allocation in high risk, high growth tech anyway. You should be diversified at that point. Um, but if you're 30, even if we see a significant pullback in AI, and even if it does take a couple of years to recover, I still feel like you're better off with a decent amount of exposure. You have to figure out what that is based on your goals. And this is not financial advice for anybody watching, but um, I don't know. Like again, like it really comes down to investment horizon and and uh, and diversification.
I don't disagree with that.
I think it's super overvalued, but I wouldn't go out and sell it because of that, because it's not 50% of my portfolio, and because I don't need the money in 5 years, if that makes sense. I also don't think it's necessarily like the tulip. What was the tulip craze or the tulip bubble back in?
Yeah, I know, but the
Not
way
that,
that people talk,
but
like, do you know how many transactions there were in the entire tulip story?
no.
26. Do you know
Okay,
how many buyers and sellers were involved in those 26 transactions?
two. I don't
Three.
know. Three.
Yeah. So the entire tulip craze was three jackasses that bought and sold product between themselves 26 times. So the whole myth of the tulip craze is
Hmm.
that it's a myth.
That's a good.
So
That's a good history lesson
yeah,
actually.
well, there was a lot of comparing of Bitcoin to the tulip craze back in
Yeah.
like 2017, 18. So
All right, Buffett made that comparison.
did he?
Yeah.
Now something got me down the rabbit hole of researching that whole thing.
Hmm. Very
Um,
interesting. I mean, so if you were looking for a speculative invest, again, like maybe this is 5% of your portfolio, but if you were looking for a speculative investment right now, is there somewhere besides AI that you're looking?
it's hard, right? If all of the growth is in AI or
Exactly.
robotics, but I kind of combine those two together because I don't know of a major robotics play that isn't AI driven.
Yeah.
And many of the AI trades have a robotics element to it. I was
Yeah.
thinking about this on my drive back from lunch today. Like, you're looking at the billions of dollars that Mark Zuckerberg is spending right now to recruit the AI dream team. They compared him to, who was the Yankees owner who did that to win at all costs?
Steinbrenner.
Steinbrenner. And wondering, though, if you bring in all of these huge personalities, are you actually going to build a cohesive team, or are you just going to have chaos? And what's interesting from a meta perspective is they're not the traditional AI play that you would think. Like, they're not chips, they're not data centers, they're not specific technology. Like, what's the play there? And I ask that because if I was to look at primary revenue drivers beyond chips and data centers, it would be the companies that are just being born right now that are taking advantage of economies of scale with the chips being manufactured, with the energy sector being figured out, with the data centers being built, which are all effed up right now, that are going to build on that layered technology. I look at it, if I was to compare it to crypto, 2017 and 18, right? Ethereum was just starting to blow up, but then everybody started building on top of it, right?
Yep.
And you have thousands, there might even be tens of thousands or hundreds of thousands of projects built on top of it now that have created billions upon billions of dollars of wealth for the builders that built those those rails.
Yep.
So now we've got the LLMs. Who's going to build on the rails, and who's going to build the next billion-dollar company?
Interesting you brought up Facebook or Meta. A couple of years ago when Facebook rebranded to Meta to capitalize on the metaverse, and companies were over-investing in the metaverse. I guess that was maybe 2021-ish.
Yeah, and a bubble burst in that in 2022.
Right, exactly. So like there's a bubble that we can point to in recent history of, an area of tech that was heavily over-invested in. I think it's fair to say the metaverse was a bubble from an investment standpoint.
OMG, you're preaching to the choir there.
So yeah, it will be interesting to see where the AI trade goes, even just over the next 6 months. But earnings season is beginning, and so there is going to be a renewed spotlight on some of these names to see if some of this is translating to bottom line. Is Wix publicly traded?
I believe so.
That would be an interesting one to watch. Yeah, Wix is publicly traded. They're at 162 a share right now. They trade on NASDAQ.
What is their market cap, though?
Their market cap is
$9 billion.
Yeah, so a little over 9 billion. If you look at like their performance over the last 6 months, it's been straight line down.
Even over the last 5 years, they were worth more pre-pandemic.
Yeah, it's actually interesting. They were trading at 300 a share actually 2021, they were trading at 300 a share.
They were trading at 353 on February 19th.
Yeah. Is that why they're making an investment into AI to become more relevant? That might be an interesting play to watch. Although they just bought Base 44, which you've completely indicted. So I don't know if...
I know, and I mean, maybe there will be a transition point, and maybe there's going to be like documentation on how to properly use it that will overcome a lot of these critical flaws that I am seeing. Right now you have a platform, it's like the wild, wild west, and it's like, what the F do I do with this? With that being said, like on my radio in my car when I'm watching CNBC, some of the stock prices come on, and I see like Microsoft is about to hit $500, right? I put that into Claire's portfolio at $35 a share. And I think now as I'm looking at like, Claire got, I think, 3 or 4 splits from Tesla. Like Tesla is a 300x return from its IPO. So I look at a Wix at a $9 billion market cap, and if it's moving into the AI world, has it got a 10x in it over the next 5 years?
Well, you can kind of see where Wix is going with the Base 44 acquisition. Like Wix is a website building platform. It's funny, like I didn't really think about Wix for at least the past several years, but going back to like maybe 2017, 2018, like they were a pretty big player in like the website builder space. They kind of lost relevance, but I see on their homepage now that they have an AI driven website builder that you can now use. And so it's easy to kind of see how buying base 44 would turn into like being able to use your Wix account to build an AI app, an AI built app for your site. So I can kind of see what they're trying to do. Does that make them like another Tesla like play? I don't know, but I can see what they're trying to do to become relevant again.
Interesting. I mean, this kind of goes back to that question where you had asked, like, where would you diversify or where would you look? I think
For
that
speculative,
this
for
is
speculative,
9 billion considered small cap
9 billion. It's
when you're
not big
talking about
cap.
all these trillion-dollar companies?
Yeah, it's not. I mean, they're traded on Nasdaq, so I don't know if I would call them. Like they're not a pink sheet, but yeah, 9 billion today is probably a mid cap company.
Hmm. What are the other companies like this? Like, am I going to go invest in Nvidia right now at pushing on a $4 trillion market cap when I feel like there's the potential for a bubble? I don't know. I don't own Nvidia.
The only way I would be investing in Nvidia right now would be if I think that 30 years from now the entire world is going to be different because of AI. Because if that's the case, I think Nvidia is cheap. And I'd be willing to ride out a 76% pullback crash, basically. Um, but I wouldn't be buying it thinking that it looks cheap over a 6 month window. Even if it pulls back during earnings season, like they have a bad quarter, I probably wouldn't be trying to play that as like a value play in the short term. But again, if AI changes the whole world over the next 30 years, it's cheap, would be my personal opinion. It's like how
Funny.
everybody said that Apple was overvalued in the early 2000s or the late 2010. Still had a lot of room to run because they didn't even realize the ways that Apple was going to change the world. I don't know.
No, I know what you're saying. It's interesting. If you go back to I launched the 2040 um, fund in 2018, and it had it was looking at 2040, but it used ETFs to diversify even greater. And I made the mistake of following into a lot of Kathy Wood's funds, which have
Mm.
not proven to be the right place to be. So if I look now at like, okay, Claire and Carter have very robust IRAs and UTMA brokerage accounts because of their success in crypto, and I want to diversify them out a little bit. What portfolio am I building for them 30, 40, even 50 years from now?
To me, it's probably like a high growth ETF. I think
Like
it's
Kathy Wood?
no, but maybe like a Vanguard or nothing against Kathy Wood's fund. But I'm not. I just don't have quite the kind of risk profile that she has. But yeah, I would. To me, like you have to be in a high growth, aggressive growth fund for that kind of a time horizon. Um, but I also wouldn't try to choose individual companies because we've gotten to a point in kind of market cycles or just a kind of point in like the evolution of the economy that companies I think are just going to come and go in the future a lot more frequently than what we saw
Let
50
me
years
re-ask
ago.
the question then, because it's super easy to say that. Oh, it's funny. We talked about this before the call. We never actually ask questions, and then Riverside has trouble picking up on snippets for reels. So, if the question was, given a longer time horizon, knowing that many companies such as Microsoft have done 15 or 20x in the last 5 years, would you still want to diversify into the S&P 500 or even some of the other sectors? Or should a percentage of your portfolio be individual companies like potentially, and not saying that this would be a good one, a Wix at a $9 billion market cap, considering that they have the potential to go to a $100 billion market cap? Can I get a 10x where in a diversified ETF like an SPY, I might only see a 2x in the same time frame? Meta did it. Tesla did it.
Yeah.
Nvidia did it.
Yeah, the precedent's there.
Microsoft did it.
I think so. I mean, I don't know. See, because the thing is, like, what I think you're going to see in the future is you're. I feel like blue chip. The idea of blue chip companies is becoming like a dying idea. Because companies are getting iterated or innovated out of relevance so quickly nowadays that it's hard to choose even for a 5 to 10 year window. It's possible that a lot of the leaders in AI right now won't even be relevant 5 years from. AI will still be, but probably not a lot of these companies. Like I doubt we'll still be talking about Base 44
Oh,
3 years
that
from.
name will probably disappear into Wix's
Yeah,
Apple.
but even still, like even the ones that like OpenAI, for example, will we still be talking about OpenAI 5 years from now as the leader in? I don't know. It's kind of like MySpace for social media, or then it was Facebook, then it was Instagram. You're seeing companies' leadership and dominance in a space. That window of dominance gets shorter and shorter, especially in tech.
Hmm.
We're getting really philosophical.
I know, but that's the thing. Like, what is the big picture here? Because there's not an obvious bubble. Like, it's not an absolute certified guaranteed that we're going to have a .com 70% fall in AI stocks. Is there a potential for it? Possibly. Um,
I think you'll see more of like your garden variety pullback correction. But I could be wrong. I mean, I know people who believe that Nvidia is going to, going down 50%.
uh,
See, I'm pulling up just a text that one of my buddies sent me that he's a really, successful tech trader. Uh, he believes that we are on the verge of a second asset bubble in Mag 7 and market indices, and that it's only a matter of time before equities heed the bond market warnings. A little bit doomsday, but
well, you know what, though? I think that I share that sentiment a little bit. And I didn't want to bring this in earlier, but like let's layer things on top of each other, right? So you've got this huge run up in AI valuations again. There's an obvious disconnect from the demand that is seeking a product that delivers a specific outcome when that outcome isn't actually being delivered, right? So you've got a little bit of a product market fit where eventually demand is going to figure that out and demand is going to decrease while supplier capacity is increasing, which is going to create an expansion of detraction, right? People want produce, and then
yep.
there's going to be less buying because the output isn't there, unless there's a dramatic change in output quality, which of course could happen. But you couple on top of that of massive, massive amounts of debt, right? Across the whole, like public, government, right? It's a recipe for disaster because it becomes a house of cards. One thing tips, and everything else that's slightly inflated deflates at the same time, and the pressure is just immense. And you saw that in 2008, right? You started to see like a subprime meltdown, and it took down everything else and almost took out the entire world economy if it wasn't for some quick action and massive bailouts. I wonder.
Well, that might be a good segue into, we have just a few minutes left, but tariffs, because markets are a little bit mixed today, but mostly moving in the upward direction. But yesterday, markets pulled back kind of like 1% across the board, and it was because the administration came out and said that while they were extending the pause on reciprocal tariffs until August 1, they indicated that that would be the last extension of that deadline for pretty much all of these countries to renegotiate a trade deal with the U.S. And so markets went down on that news because it seemed like the administration was taking a harsher stance on tariffs than it had been in the last few weeks. Um, what do you think? What are your thoughts on where we're at with some of the tariff dancing?
The dancing is the best analogy that I think that you could use, because the markets, I don't know that they believe, right? How many times can Trump say, I'm not going to do this, I'm not going to, but then he does it, right? I'm not going to extend again, I'm not going to delay. This is it, this is it. And then 5 minutes later, that's not it.
Yep,
Like,
I
what do
think
you
it's a good
do with
point.
that?
No, I think that's a good point. That's why, we when the administration made the announcement yesterday, we saw that pullback, but it was a more modest pullback. It was only 1%. And today, it seems to be risk on again in the markets. And so I think you're right. I think, what's the analogy that's been going around Wall Street, the taco trade? Um, I think that that's kind of the sentiment that seems to be prevailing. Um, and so, yeah, at this point, if August 1 comes around and a really strict, steep set of tariffs do go into impact, that would probably drive markets down. But anything short of that, it seems like investors are kind of largely looking the other way, just because there's so much back and forth. These policies get rolled out, then they get walked back and over and over. Um, yeah. At the same time, I wouldn't mind seeing a little bit of a pullback, just given the monster run up that we've had from April. I'm looking for an entry point on some stuff, and I wouldn't mind seeing a little bit of a pullback, but it seems like the sell in May mantra hasn't really applied to this particular summer. So it's been interesting. I've got money I've got to put to work. I've got to buy, but it's hard to buy when you're sitting at record highs on the S&P.
It is, it is. All right. I think my brain's fried.
I think that's a good place to leave it.
Yeah. Um, I'm really, I guess in my mind, I'm really just trying to think through where's the market, like who isn't though? Like where's the market going at the macro? What time frame is it going to go there, and how do you play it?
Well, I think we're going to end 2025 being up somewhere between 5 to 9%. It's not going to be a blowout year like we had last year
For
where
the
we were
full
up.
year or from where we are now?
Oh, from for the year.
Okay, because right now, what are we up, like 2 or 3%?
I think we're up maybe closer to 5.
Already at 5. Okay. It's so hard, when you have a 23% drawdown and then you come back from that in like a couple
We
weeks.
had a massive sell-off and rebound all in the course of like 2 to 3 weeks in April. I think we're up somewhere close to 5% on the S&P for the year, but I do think that we're going to end the year being up like 5 to 9%. So like a very modest, lackluster, especially compared to the previous year where the S&P was up. I think it was over 20% on the year for 2024. So I mean, I think that's where we're going to end. I think
Actually, year to
overall.
date, we're up 6.13%.
Okay, so it's up 6% now.
I had
Okay.
to look that up. I'm surprised we're up that much.
I still probably wouldn't revise my kind of target for the year of 5 to 9%, which is a big target. It's a big range, but
I
yeah.
don't know, given the market dynamics in the second half of the year coming up, that I would, like with Claire and Carter, I would take anything out of their Bitcoin holdings to roll it into the S&P 500 to diversify at this point.
Say that again. Roll it out from what?
From Bitcoin into the S&P.
Oh, you want to you want to liquidate some of the Bitcoin positions?
Well, I wanted to diversify them. I think that's like the majority of this conversation is if I did, where would I put them?
Yeah, I mean that's the $1 million question. I again, like also though, thinking like this is for Claire. Claire is what, 7 or 8.
Hmm.
So like for my kids' portfolios, I'm still buying it. Like I literally just bought maybe yesterday or last week before the holiday. I bought more S&P index funds for my kids' portfolio. So when you're talking about that kind of like super long-term trajectory, I'm still buying. It's really more so for like my taxable brokerage that I have a harder time justifying like buying it at a all-time historic high. But yeah, I mean for that, for if you want to, if you need to diversify, you want to get out of Bitcoin, it's a long time, horizon. I'd probably still be buying SPY, VTI, those sorts of funds, or something that's more aggressive growth.
All right. Well, let's end it there.
All right,
See you next week.
bye.